Well, I do think there's going to be a silver price shock. And what I mean by that is a period of time where the silver price rises 100% to 200% in like a year. It doubles or triples in a year, maybe more, where we see daily price jumps of 20%, 30%, even more.
Hello there, my friends. Chris Mark is here with you for Arcadia Economics. Quick note before we start today's video, if you're into silver, which I'm guessing you are if you're watching this video, I do have a book coming out called The Big Silver Short, where it really digs into all the stunning things that have been going on in the silver market. It's done in interview format, and today's show guest, Jeff Clark, gave an incredible interview in the book, which will be coming out in a couple of weeks. So click on that link in the upper right that just appeared to get more information. And now here's today's show.
Hello there, my friends. Chris Mark is here with you for Arcadia Economics. And today, excited to have a good friend of mine. And I will not make him say it, but I will call him a gold and silver genius. And that's Jeff Clark of goldsilver.com. Although, fortunately, you don't even have to take my word for it. You can see how many people watch him every time he gives a presentation at Cambridge House. And I'm not making this up, but in my metals folder, which doesn't have a lot of slots, his presentation is bookmarked because, Jeff, you share some incredible research. So I'm fortunate to have you on here today. Real quick, before we get started, hit that subscribe button right down there and the notification bell, so that when Jeff is kind enough to join me and break down the things that Wall Street will never tell you, you can find out about it as it happens. So with all that said, Jeff, it's a pleasure to have you on here today. And how are you, my friend?
I'm doing real good, Chris. It's great to be back with you. Very kind words of you to say. I think it's just, I've been doing it a while. I've been studying the markets for a while. I've been a gold and silver analyst for a couple decades now. So yeah, maybe I've learned a few things that's helped me that I can pass on to other people. That's really what it is. So
well, I would say it's more than a few, and perhaps that's why you're speaking at these conferences that I go to. And perhaps to start off, recently, I guess 2 months ago, last month, we were at the VRIC conference in Vancouver, and you were speaking there. And maybe you could share any thoughts. Obviously, I know the past couple of years, while the price was down, people were looking not so chipper. Yet having that rally last summer, seems like there was a bit of a different tone there this year.
There was, specifically at the Vancouver conference there in January. It was clearly attendance was up. There was a lot more excitement in the air. There were a lot of great companies there. So it was nice to see that turn in the markets. It was not over-attended. It wasn't real crowded like it was in 2011, though. But we've endured quite a bear market here in gold and silver for a while. So it was nice to see a change in tone there at that conference.
Yeah, well, I think especially for the miners, which we'll dig into a little bit later, even a couple $100 and a few dollars in silver make quite a big difference. So and certainly some of the share prices have reflected that. So life getting a little easier for some folks. Although before digging into the mining stocks, I mean, I wasn't gonna. I couldn't go on here and not mention silver more than 3 minutes in. Especially, you mentioned you see a silver price shock in our future, which, of course, how am I going to sleep without knowing more about that? So why don't you let folks know what it is that you are seeing and expecting?
Well, I do think there's going to be a silver price shock. And what I mean by that is a period of time where the silver price rises 100% to 200% in like a year. It doubles or triples in a year, maybe more, where we see daily price jumps of 20%, 30%, even more. And where the gold silver ratio, the gold price divided by the silver price, it's above 90. As you and I talked today, it's above 90 again. This is incredible. But where it actually falls to 20, maybe even lower than that. That would imply, what would that be? A fourfold return if it did fall to like 22, I believe, from the current level, where silver outperforms gold by 4 times. All of those things, I think, are things that are in our future. I don't know the timing. Nobody ever does. But I believe it's in the future. It'll probably be towards the end of the run, whatever that run may be, whenever that run may be. It'll probably be in the last year. So, but a lot of people hear me say those kind of things and think, oh, that's pretty extreme, especially in light of gold and silver not doing a whole lot. Gold's been doing well. Silver's still trailing gold. It's still underperforming gold in spite of the recent rise since last summer. So how can I say something like that in light of all of that? Well, that's because it's all happened before. Every single thing I just mentioned has happened before. And so I think that's what I mean by a silver price shock. And I do think those things are going to happen again. And they're all predicated upon there being a financial shock of some kind, whether it relates to our debt, whether it relates to something with our currency, whether it's inflation, and we may even get deflation first. That's what Mike Maloney believes at Gold Silver. It doesn't matter. At some point, if we get inflation, that's when gold and especially silver are really going to rocket. It could be a black swan. Coronavirus could be kickstarting this. Who knows, where we actually start to see, an economic slowdown or something like that. So I don't think we're in a position where we can escape some type of financial event, to put it in general terms. And when that happens, I think that's when gold and silver really start to move. And as they gain momentum, silver is going to outperform gold, because we know the silver market is much smaller than the gold market. Yep. And that's why it's so volatile. That's why it moves more. And so when you have a bunch of people crowding into this trade, it doesn't take a lot of cash to really push this price up. So I know that sounds extreme, and it is extreme compared to what's happening to the gold and silver price right now. But I'm just convinced that that's what's going to be in our future.
Yeah, although on the other hand, another thing that sounds extreme is that the Fed's already putting more money into the system than when they were doing QE, and they say don't call it QE, although I found it somewhat startling that Jerome Powell a week or two ago was already mentioning how they're going to do QE during the next downturn, which was confusing to me because I thought the economy's great. Janet Yellen said we'd never see another crisis in our lifetime. Yet the debt keeps skyrocketing, the borrowing keeps skyrocketing, and the printed money keeps skyrocketing. So am I looking at this correctly, where to me it's like, all right, I know it's been a long wait for gold and silver, but someone explain how these factors are ever going to be resolved. Is it even mathematically possible that the debt is paid off, the interest rates go back up, or are we kind of past the point of no return where they're just going to keep printing until they can't print anymore?
No, the debt would never be paid off. I mean, let's just state it flatly. The debt can never be paid off in current dollars, unless you're going to, do something to the dollar to pay it off. If you believe in math, you have to believe in gold, because the debt can't be paid off. So I think that's why that's one of the core reasons why I'm in gold and silver at this point in history, is because when it comes to our markets being in bubbles, the economy going indefinitely, expanding indefinitely, currencies, what we're doing to them, you can't have this kind of trend in these things continue forever, pardon me, without there being some kind of fallout or a consequence or ramifications or whatever the case may be. It feels like that. and the Fed is going to do whatever it can do to continue the party, as the saying goes. So, again, the timing is the issue. But since the debt can never be repaid, and since it's at all-time record highs, whether it be government debt, corporate debt, there's a whole army of analysts out there that are worried about corporate debt. They think that's the bugaboo, or some say it's private debt. It's not government debt, it's private debt that's going to bring us down. The whole army of analysts saying, no, it is government debt, because they're just going to continue to dilute. So you have these almost competing factions on which debt is going to be the bugaboo. It's all debt. Any of it could be the black swan that blows all this up. So to be honest, I'm not worried about gold and silver never responding or going into this hyper bubble that some of us think is going to happen someday, because they kind of have to, because of the situation that we're in financially and fiscally and monetarily and with our currency. So I think it's coming, and I just think we have to hold on until that event starts to really unfold.
Yeah, it has seemed to me like it's inevitable, because they're if they haven't reversed the policies by now, it's like, all right, at least if they were saying, wow, we really need to do something about this debt yet. Do we even still have the debt ceiling, or do we just cross that one off the napkin?
Right.
And so by all means, I am not giving legal license, financial advice, or whatever, paperwork you have to fill out to be able to do that yet. So again, this is just my thought here, and to get your comment yet. To me, it seems like for people who can have a long-term perspective and the right mindset, which maybe is the opposite of the CNBC Wall Street, yet, I don't know, you don't need to watch my show. Just put your silver and gold somewhere safe. If you look at mining stocks that can withstand a low price environment, I mean, hey, could silver be $18 3 years from now? It seems a bit illogical, but all right, if there's a company that maybe runs into trouble at that level, but I mean, if you have companies with balance sheets where they have good deposits, they have metal in the ground, they can withstand the timing, that almost if you just take that stuff, put it somewhere, and then forget about it and go live your life, that it's almost, it has to be like a legendary, historic opportunity for people who can actually have that long-term view. Is that capturing it right?
Chris, every chairman of the central bank, the U.S. Fed, alive today, has issued a direct warning to us. So while you and I worry about the timing, every single one has issued a warning. Let me just read some of these. Janet Yellen said monetary policy would not be enough to fight the next recession. Okay, she said this publicly. And by the way, she said that after she left office, when she could more freely speak her mind, right? She wouldn't say that when she's in office, but after she left, she's like, hey, monetary policy is not going to be enough. Debt is so bad, it should keep people awake at night. Janet Yellen, a chairman of the U.S. Federal Reserve, actually said that.
And this is the same Janet Yellen who also said we wouldn't have another crisis in our lifetime, right?
Yeah, she said that probably when she was in office, right? So then you have Ben Bernanke saying our tools are less effective. The San Francisco Fed president, we have less room to maneuver. Jerome Powell just said last month, we will use QE and forward guidance aggressively. Why? Because we have less room to cut rates. The Dallas Fed president he publicly said this. Don't rely on the US dollar to remain the world's reserve currency. Whoa, you have a president of that was the Dallas Fed actually saying publicly, I mean, if there's not a bigger warning than that, I don't know what it would be, because there's major ramifications if the US dollar really is not going to be the world's reserve currency. Alan Greenspan, inflation will inevitably rise. It poses the largest threat to the economy. Look, I've collected these quotes over the past year or so. Every chairman of the central bank of the United States of America has issued a warning. they're all saying to get ready for something. They're saying this can't last forever. They acknowledge that their tools are not going to be effective enough. They can't lower rates enough to really combat even a mild recession, just a regular business cycle recession. They don't have the tools to do that. And forward guidance, let's be honest, that's just talking. That's nothing, it's really all that effective on a long-term basis anyway. And then you have to decide if you believe them, and if their forward guidance is really effective. Did you know that in the past 8 years, the Fed's own goal has not been met when it comes to inflation? They have not met their goal 85% of the time in the last 8 years. Their own goal. They can't even hit their own goal 85% of the time. So you can't trust that they're going to be able to find a way out of this for all of us, especially when you not just consider the debt, but when you consider their main tool, like you said, is probably going to be some form of QE. It'll probably be called something different. It'll be labeled differently. It'll be couched in positive language and good for all of us and all of that. But the bottom line is they're still going to dilute the dollar. And my gut feeling tells me that they argue that QE worked in 2008, 2009. That's debatable. But when they do it again, I think it'll become obvious that it doesn't work, that QE won't be effective in helping them reach their goals. And of course, that means they'll probably do it more because we didn't do it enough. Yeah. So my point is that—
Why not?
Right. My point is that central bankers have literally warned us publicly, this party can't last forever. There's going to be a shift. There's going to be a change, and it's going to have consequences. And it's obvious that we as citizens and investors should prepare for it. And of course, one of the best ways you can do that is to own gold and silver.
So it would appear as if Ben Bernanke's circle of virtuosity that he described in his 2010 Washington Post op-ed shortly before QE2, where it was going to spur this cycle of growth. And you actually mentioned the appearance of wealth. I'm like, the appearance of wealth? I mean, that just doesn't sound good. Yet in the end, is this why countries like Poland and Hungary and others are taking their physical gold back and saying we want to hold it?
I think each country has their own reason that they're doing that. I don't know that they necessarily distrust the Fed or think that where their gold is being held is not secure. These are some of the best vaults on planet Earth, right? That's not the issue. The issue is they want to have it accessible immediately and available to them in case of some type of financial emergency. So, I mean, let's face it, most of these countries put their gold in the U.S. as a result of the outcome of World War II. The U.S., America, was the safest place to store it, so that's what they all did. And so it's only natural that, at a point in time, they would want to take some of that back. So it's not surprising, really.
Yep. And back to the silver market for a second. I know you do a great job of this in your presentations, and maybe put it into perspective for people how small it is, because, geez, maybe even if like a couple Tesla investors sold their stock, put that into silver, that could be enough, where I don't think people often grasp that. And especially if you think about a scenario where people are selling stocks and bonds and start looking to the metals as a true safe haven, it doesn't really take a lot of money to go in there before quickly, and you tell me, possibly there's a dislocation in the market, and that's when we see some of those bigger moves like you said in the beginning?
Yes. So we know that the gold market is small. And the silver market is actually much smaller than the gold market. So here's one example, and I did this for my talk in Vancouver last month. So when that video comes out, you have to watch it because I had a little visual aid there to make it more fun. But Credit Suisse said at the end of 2019 that global wealth was $230 trillion, so a little over $250 billion in wealth. That's investments, cash, land, that sort of thing. Meanwhile, all the above ground silver that's in investment form, so in coin or bar form, we don't know exactly how much it is. There's a lot of different estimates out there. One of the more common ones is 3.4 to 3.5 billion ounces. So I'm excluding jewelry and industrial use and stuff like that. So 3.5 billion ounces, let's say, times $18 silver, that's $63 billion. So it sounds like a lot of money, but compared to global wealth, it's actually infinitesimally small. So global wealth around the world is 3,650 times bigger than all of the investment grade silver that's available.
Yep.
That's how small that market is. Now, I'm not saying all that money is, all that currency is going to go into silver. It's not. I'm just saying it just would take a teeny little bit going into that teeny tiny market to really impact the price. And of course, that's what I think is going to happen at some point over the next, 1 to 5 years. Who knows? At some point that's going to happen. That's going to have a dramatic impact on the price. So I think it's coming.
Jeff, another thing that will be interesting to see whenever that does happen, and again, I do see gold and silver moving up as more a question of when rather than if. A lot of people look to the mining stocks, where certainly in a rising bullion environment, mining stocks can do great. Obviously, in the opposite of that, when gold and silver going down, not as much fun times for the miners, but curious, any overviews on where you see the mining sector at these days?
Yeah, but before we get into that, Chris, I want to tell you one other thing about that, about the size of the silver market and how that can impact the price. So I went back and looked, and in 1979, so the last year of the mania for gold and silver, back then, there were 12 days where the silver price rose more than 10%. There were 5 days where it rose over 20%. And yes, there was a day in 1979 where the silver price rose 36.5% in one day. So that's the kind of volatility that we can see in silver, again, because it's so small. It's just not going to take a lot of cash or currency coming into this to really drive those prices. I think that we'll see that again. Volatility last year, by the way, in 2019, if you measure that versus what the volatility for silver was in 1979, in 1979 it was twice as much as it was last year in 2019. So we're definitely going to see some very volatile days again for silver. It's going to be fun. It's going to be lots of fireworks. Again, I think it'll happen towards the end of this run, but I think it's coming. It's going to be fun for those of us that already own silver.
Yes. Which, by the way, I'll just mention that you are part of goldsilver.com. So if people are interested in buying silver or gold, they can go to goldsilver.com. We'll have the link to that in the description below. So that's part one of my interview with Jeff Clark. Obviously, he sure knows a lot about gold and silver. And if you enjoyed that, then you're definitely going to want to see what he had to say about the mining stocks. So just stay tuned and click on the box that's about to appear now.